welcome to ET Now Hangouts with me, Ankita Saxena. Well, I'm back with yet another exciting episode of meaningful conversations from influencers, the latest trends and what's hot for the weekend. Well, my first guest today is Anushka Rathod. She's India's first finance content creator in the short-form video space and recognized as the Forbes 30 Under 30 Asia list of 2024. Well, she simplifies personal finance through 30-second reels, amassing over 2 million followers. Well, she also writes the Core Club newsletter with 10,000 subscribers and is building an influence-focused community with her new venture, the Influence Club. Well, she recently launched her very first book, a one-of-a-kind graphic book on simplifying money management called The Money Guide. Hi Anushka, welcome to ET Now Hangouts. It's a pleasure to have you on the show.
Thanks a lot for having me yet again.
Anushka, in fact, a lot has changed since you last joined us. You made it to the list of Asia 30 Under 30 Forbes. I mean, congratulations
and
for
even
that.
India.
And India also. Congratulations for that. And the biggest news, The Money Guide. That's your new book, right? That you have written over a period of a year. Very graphical book, I must say. I mean, a lot of pictures and diagrams and, very self-explanatory. And there are a lot of QR codes also. Tell us about this book firstly.
Right. So whenever, we think about personal finance, we think it's very boring. And there are a lot of books already on it, but it's very black and white. So from an outsider's perspective, say someone who's young, who's not from the finance world, they find it very intimidating and they find it very boring to even begin. So when I started making content also, my entire motto was to make finance easy and accessible for everyone. Right. But then what happened with social media is that I did put a lot of content out there, but it was all scattered. So the biggest feedback I was getting from people is that this is not actionable. Like, we have a lot of information, but we don't have anything at one place so that when we want to make decisions, we can refer to it. So I wanted to, that's when I thought, okay, fine, I know how to break down complex topics into simple words. How do I bring everything together at one place so that no matter what, say over a period of 5 years, 10 years, whatever financial decisions you have to make, say for example, investing, buying an insurance, planning for retirement, buying a house, credit cards, how do you get all that information in one place and how do I make it which is interactive as well as actionable at the same time? So that's why I thought, why does a finance book have to be black and white? Let's make it colorful, let's explain things graphically. And why does it have to be, like a very static thing? Why can't I make it interactive with, Excel sheets, worksheets? So that's why, because of this beautiful technology of QR codes, I've added that all around the book. So you can, scan and you'll get like, say, a buy versus rent calculator, or you'll get a EV versus petrol calculator.
Wow.
So this book is basically how do you manage your lifestyle, how do you manage your investments all at once, hopefully in a way which is, interactive and something very easy to understand.
Yeah, that's very unique, very interesting. In fact, I was going to ask you, how is it different from other books on investing and what is the USP? But you have, I think, explained quite a bit on that. But Anushka, tell us, what are the few highlights of this book? Are there any topics that you've picked out that are, you feel that it is something that people should be focusing on? Which chapter is your favorite?
Right. Of course, the chapter on grow, which is how do you grow your money. That's the last segment of this book. And why it's my favorite is because a lot of times people come and tell you theoretically that, you're supposed to invest, you're supposed to start an SIP, you're supposed to invest in XYZ mutual funds. And people are like, okay, I should do that. And then they go to their broking app and they're like, okay, but where and how do I select a mutual fund? Which mutual fund? There are so many of them. So I wanted to, all these essential investments that people have to make, I wanted to actually show them step by step how they can do it. So I've gone to the Amphi's website, I've written down all the parameters, I've taken screenshot at every step that this is step 1, this is what you'll see at the interface. This is step 2, this is the first shortlisting metric that you have to add. This is what the interface, what you'll see. This is step 3, this is step 4. So step by step I've done it for active mutual funds, passive mutual funds, debt mutual funds. Similarly, I've done it in other segment as well for insurance, how to build a portfolio. So everything I've broken down into step by step, taken screenshots so that people know exactly what's going to happen when they implement it in the real world.
Right. So Anushka, let's get started with, from one of the chapters. In fact, let's get started with the investment journey itself. Then how do people start investing and what are the common mistakes that people make while investing?
I think most people, when they start investing, is either they hear us on social media or they're seeing their tax being deducted from their paychecks, and I'm like, okay, I need to save on taxes, or I need to start investing. So they'll go on their broking apps and they'll start an SIP, looking at whatever fund has given the highest return, or they'll want to save on taxes, so they'll either go with a tax saver FD or a PF. Now the biggest mistake that they do here is that, one, they're not identifying what exactly their investment objective is because of which they are investing. So what happens with this is that a lot of times I've seen this, that people invest, say, in an ELSS mutual fund to save on taxes. Yeah, or like a provident fund, but then they want money, they want liquid cash 3 years or 4 years from when they invested. But they can't redeem it, or even if they can redeem it, they lose out on the tax benefits and they have penalty also which they have to pay. So one thing that you need to do, and one thing which most people forget, is identify your time horizon and accordingly invest. Don't invest just for the sake of it. And I would say another mistake with also that people make is they don't understand what exactly they're doing with their investments. So a lot of people, when the crypto wave came, they invested in crypto. But even if not crypto, in mutual funds, when small caps are giving a lot of return, they invested there. There are sectoral thematic funds, whichever sounds interesting and has given a lot of return over the past few years, they invest in that, not knowing what exactly they're investing in, what the risk profile looks like, what the time horizon is. So whenever you're making your investment, ensure that you also know what exactly you're investing in, how it works, what time duration you should stay invested in, so that whenever there are, panics in the markets, there is volatility, you stay invested and you don't feel that your money is unsafe and you lose sleep over it.
Right. So speaking of which, you've already listed out a couple of things, the things where people are going wrong as far as investment is concerned. Then, what is the right approach to investing? How can people go about investing right?
Right, so let's just correct the two mistakes that I said people make. So firstly, identify what your time horizon is like. Do you want to invest for the short term? Say, you want to go abroad for your masters, or you have a wedding coming up, or a vacation coming up, or you want to buy a house, you need that money for your down payment. So whatever, it could be a short term, it could be a medium term, or it is something like you want to invest for the long term, say retirement, or just general wealth creation. So first, identify your time horizon, and accordingly, so the longer time you have, the more risk you can take. So accordingly, you have suitable investments which you should invest in then. And also, according to your time, you also have different lock-ins for different products. So first, establish your time horizon where you want to invest. Is it the short term, medium term, or just like long term for wealth creation? And accordingly invest or accordingly select products. And second thing is, even though mutual fund SIPs are better than FDs, but if you don't understand how to select a mutual fund, then go with something which will probably be a safer bet, which is a Nifty 50 index fund, or it will be better if you start investing, say, with a provident fund or with an FD, because you need to stay invested for the long run. You need to know that there are going to be ups and downs in the market, and you need to exactly be able to you need to be able to sleep at night and have peace over what you're doing. So identify or understand what exactly you're investing in, and if you don't understand the risk that you're taking, invest in safer assets.
Yeah, right. Having said that, people have different needs, they have different goals, they have different time horizons as well. So how much money should one invest? I mean, we have the 50-30-20 rule, where you spend 50% on your needs, 30% on your wants, and 20% towards savings. Do you concur with that firstly? And if not, then what should be one's percentage? Even though people have their different needs and different time horizons, but in a base case scenario, what should be the amount?
As high as possible. If you can save 90% of your paycheck, save that. So this is a very, very personalized thing, very subjective thing, depending on what people are earning, where they're staying.
But 90% is very unrealistic.
Family is, whatever their family responsibilities. So as high as you can, but if you can't, what is the maximum that you can? Identify, or look at your past 2-3 months expenditure, see what are your essentials, see what are your discretionaries, your luxuries, Identify those things. There are a lot of online budget planners, subtle plug, my book also has a budget planner. So you can actually identify and categorize your expenses of last 2-3 months, see where exactly your money is going, and identify that, okay, this 20% is something that I can cut down on, it is not essential, and I am spending a little bit more towards discretionary. So this 20% I can save instead, and I can invest it for my long-term needs. Now, how do you create that discipline? You don't. You, as soon as you get your paycheck, you take that 20%, you invest it so that you don't have that mental barrier ever that I need to save. The money is gone. It's not there in your bank account. You won't be able to spend it. So as soon as you get your paycheck, identify that amount. It could be as less as 5%, as high as 90%, whatever, your finances allow you, and do that immediately.
Right. Another big thing that people worry about is tax. How does one invest to save on taxes? What are the potential tax saving instruments? Of course, ELSS we all know, but potentially how can you invest to save on taxes?
Right. So again, when you're saving, when you're investing to save on taxes, again, the first thing that you need to do is also identify what your time horizons look like and what primarily your financial goals are. Yeah. So if you're investing for the long run, if you have that time horizon, your ELSS, your provident fund, these are good options to have. But if you have a shorter time duration, then you can look for something, your tax saver FDs, which are 5 years, your national savings certificate, which is also 5 years. So according to your time horizon, you then invest for your tax saving purposes as well.
Right. So let's talk about short-term investing and then long-term investing. Short-term investing, we are in the thick of summer season right now. In fact, summer vacations are going on. So, and everyone wants to go out and vacation. How does one save or invest to plan for a vacation?
Right. So when you want to go for a vacation, say in the next if it's immediately, then your investments won't help you. But say if it's in the next 1-2 years, then you have like a very short time horizon to save and invest. Yeah. Now in this time horizon, you have a couple of options. So first of all, because the interest rates are on the higher end, you can start a very simple bank RD, where every monthly the money will go out of your account and get invested in that RD, and you learn certain percentage on it. If you want to explore options which are there in mutual funds, then there is one option which is called as liquid mutual fund. Liquid mutual fund is an equivalent to a savings account. However, currently because of the repo rates, because they're higher and it gives 1-2% above the repo rates, it's giving a good 7-8%. Another alternative is also arbitrage funds, which is slightly higher risk than your liquid funds, but it also has the potential to give a little higher return than liquid mutual funds. And they also have tax advantage because they are taxed like equity mutual funds.
Right. So that's how you plan a holiday. I'm sure all the young people listening to this, they'll start investing and planning for the future holidays soon. But let's talk about the long-term investment plan then, or the retirement plan. How does one start planning for their retirement, especially for someone who is unlikely to get a pension?
Right. So, see, your retirement planning, especially, when you're young and even when you're in your 20s and 30s, it is similar to creating wealth for yourself. So the maximum amount you can contribute and what balance risk that you can take so that you maximize your wealth creation, that is how you go about it. Right. Now, there are a lot of calculators that are available online. So ideally what you want to do is you should go online to use one of these calculators where you need to input, say, today monthly I'm spending XYZ. This is what the inflation rate looks like. I am going to get, say, a 12 to 13% return on my portfolio, and that will give you like a rough figure as to what your entire corpus should look like at the time of retirement, and accordingly how much you should save today. Now, today when people are young, you'll see that number of what you should save today is very high, but don't worry about it, because with time your earnings are going to increase, and hence you can invest and save more as well. That'll give you static number of what you need to save throughout your earning time horizon. So don't worry about that. But how that will help you is that it'll just give you like this reality check that, oh, I have to save this amount, and accordingly I have to prioritize saving and investing. Now, right. Once you have that amount in your, from that calculator, and also you've identified from your own expenses that this is how much I can invest, this is, from my discretionary expenses that I don't need, and I can invest towards my long-term retirement planning. Yeah. So then what you want to do is create a portfolio of different assets where the risk is balanced. Now what I mean by that is you don't want to take no risk so that you're not even beating inflation or you're just getting a little over inflation. You want to take advantage of risk but also take calculated risk.
You want to diversify your portfolio.
So how do you start with that? You start with an SIP in say a good flexi cap fund or a Nifty 50 fund. Then once you are comfortable with that, you start investing say in a small cap fund or a mid cap and small cap fund, depending on what your risk preferences are. You can also start investing in something which gives you exposure to international equities, the US stock markets in specific. So once that is done, you want to also diversify with different assets like gold, and you also want to stabilize with some debt instruments, say a PF or say government bonds. Now, the more time you have towards your retirement, the more investment you should make towards your risky assets that are mutual funds and gold. Even you can explore real estate if you have that amount or you have that surplus. And as soon as, the more you are towards your goal, you should slowly increase the percentage of fixed income securities in your portfolio.
Right, Anushka. And finally, tell us, what is your investment mantra? How do you invest your money?
I am actually extremely risk averse when it comes to my own investments. So even though I'm very young, I can't take a lot of, I do lose sleep if I am not investing in, if I'm investing in something which, is relatively riskier. So I'm a very boring investor. I have my 3 mutual funds identified. I'm investing there. I have my PF on. I have my fixed deposits, and that's how I've created my my portfolio. However, I do have this 10% of my entire portfolio where I do crazy things with just to experiment, just to see what's happening. So that is invested towards some really experimental cryptos, also some alternative assets. And because of my work, I have been very grateful to have opportunities where I've also angel invested in some startups. So that also makes around 10% of my portfolio. So I would say 20% is like really experimental, really high risk, but the other 80% is relatively boring and relatively I can envision how the path is going to look like.
Right. There's one more interesting question that I want to ask you. You said you also like to be an angel investor, invest in companies like that, of course, the unlisted companies. Tell our viewers, if somebody wants to be an angel investor, with how much amount can you start and how do you go about doing that?
How much amount? I'm actually unsure of it exactly, but I think you need to have a minimum net worth, and beyond that, I think with platforms like Angel List and all, you can start with as less as 3 lakh rupees.
Angel List?
Yeah.
Okay. So it's a platform. Tell us about that.
Yeah, so it's a platform where companies which are looking to get investments, companies that are looking to get investments, they advertise there, or they put their pitch decks, they put their company's financials and their plans or whatever they want to do. And then there are investors who are looking to invest in such companies. They can then go and browse through these companies and then select where they want to invest.
All right, that's very insightful, Anushka. Thank you so much for coming over. Thank you so much for joining us today.
Thanks a lot for having me once again.
If you like this video, then like, share and subscribe to ET Now.